This is the daily fiscal pulse for the 6th of May, 2026. Just a heads up, we're looking in the rearview mirror here, not a live feed. All of this data is locked in as of Wednesday's close. Let's start with what's capturing market attention right now. The Iran and Middle East situation is dominating the narrative. You're seeing stories like Airbnb beating revenue expectations but facing Middle East cancellations tied to the Iran war, and that's clearly rippling through the markets. But numbers don't lie. Let's see what the actual cash flows are telling us underneath the headlines. Here's what moved through the system today. Net fiscal transfer came in at $1.3 billion, driven primarily by tax receipts pulling in $16.1 billion. On the surface, nothing that jumps out as unusual. What's interesting is how equities are behaving despite this. ES futures settled at 7,387, staying comfortably above that 20-day moving average sitting at 7,132. The 20-day trading band is spanning roughly 594 points. So price is holding its ground even with headwinds on the fiscal side. Zooming out gives us a clearer picture. Government spending over the last 5 days is averaging about $22.9 billion daily. When you stack that against the 20-day average of $15.3 billion, you're looking at significantly more cash flowing through to households and ultimately into financial markets. Year over year, the story gets even clearer. We're at $798.8 billion in fiscal year-to-date spending, which runs about 30% below where we were in the same stretch last year. That's a substantial pullback in fiscal support, and it has real consequences for overall market liquidity. From a tactical standpoint, the fiscal setup isn't pointing clearly in either direction right now. Our conditions gauge is sitting at +10. But here's the context that matters. We've been in similar spots before, and even when liquidity thins out, the S&P has historically averaged around +0.7% over the next month. Equities can absolutely keep grinding higher without a tailwind from fiscal flows. There's also a positioning detail worth noting. Leveraged funds have been trimming exposure, and that's running elevated. Historically, when we see levels like that, it tends to signal caution rather than opportunity. A couple of dates on the calendar worth keeping tabs on. The 13th of May is the SSA payment cycle, the second Wednesday of the month, and that typically shifts near-term flow patterns. Around the 15th of May, we've got a significant Treasury coupon interest payment window coming up. Right now we don't have a clear fiscal directional signal. The incoming scheduled flows will be the real test of whether that changes. That's where the edge sits for now.